Well, g'day there again, friends. It's the second video on the Wednesday afternoon market recap. What I just realized was that after going into such detail on the bar trade, I left out the three US indices. So I said, you know what, let's go through and do them again in a second recording. So what I'll quickly do is just recap the Dow Jones, the S&P, and the NASDAQ. And I'll also touch on the dollar, the US dollar ticker symbol on the Trade Navigator charts as ticker symbol DX. Very important chart, which I want to bring to your attention on this Wednesday evening. First of all, the Dow Jones Industrial Average today was down just over 100 points on the daily candle. We're starting to see a little bit of follow through from that inside day on Tuesday's daily candle. You can see that we're trying to push down. We've actually broken the 10 exponential moving average, and we're starting to retest that 20 exponential moving average as I do this recording. We have somewhat of a lower wick right here. We moved into the week with really some form of a neutral to bullish outlook if we can hold this what we call perspective box. And what I mean by perspective box is that this box is going to continue to act as support. So until this box breaks on good volume and a pretty decent bearish type of candlestick, we still need to remain somewhat bullish on this overall market. Yes, we are very overextended. We are very overbought across all three of the US, or at least on the oscillating indicators. You can see, for instance, that the stochastics is giving us a reading of 92. We're getting a sell signal. The RSI is moving down from these overbought levels, and we're soon going to see some form of a sell signal on the MACD. You need to be wary and of course cognizant of this, because there's a good chance that we're going to come back down and retest the bottom of this box, retest this old support level, and then this is the pivot point where we're going to say, look, is this market going to continue in the bullish direction once we retest this support level, or are we going to see some form of a more intermediate trend reversal? And what I mean by intermediate trend reversal is that, are we going to come back down and touch and test the long-term primary trend taking place on not only the Dow Jones Industrial Average, but also on the NASDAQ, all right, and also on the S&P 500. This is sort of the bigger type of picture which we're looking at and we're trying to understand as technical analysts. Now, what I said I do also is that I want to bring up the chart of the US dollar. The US dollar at the moment is giving us somewhat of a conflicting or a diverging signal at the moment. What I can do is bring up the Bollinger Bands, because this is really giving us the trade setup on the US dollar. You can see that going back to April 2014, when we broke out above 81.81 cents on the US dollar index, we have been in an absolutely phenomenal and incredible bullish trend. Now we've had periods in time and moments in time where we're saying, look, there could be a strong retracement which is going to take place in the dollar. This is so extremely overbought. This is really verging on, even a greater overbought market than what the three US indices are. Most recently, we rallied into our resistance level at 95.2. We've really just consolidated nicely, and this is a very good learning opportunity for many people in this class or watching this afternoon market recap. What happens is when we're in a bullish trend and you get very, very overbought signals on the stochastics, on the RSI, and also on the MACD, a lot of people will just, sell or at least short, for instance, the ETF or the US dollar index, or, individual markets or stocks for that matter, where sometimes, stocks can move sideways or markets can move sideways. Forex markets can continue to move sideways. Let these oscillators reset and then break out and continue in the bullish trend. This is really concerning, at least for the markets, because as the dollar continues to strengthen, generally what happens is that these two markets, or when you compare the dollar to the US markets, they should work inversely to one another. Now, at the moment, they're not. They're both in agreement. Both markets are breaking out. The US dollar is looking incredibly strong. I don't know how much longer this can continue, but what this is saying is that this should put pressure on the price of US indice prices. It's not to go out and say, look, the market's moving bearish whatsoever. No. It's just saying that, look, as the US dollar continues to appreciate in value, pay attention to the influence, the indirect or direct influence which it is going to have on the purchasing power of stocks when of course you can buy US backed securities traded on all three of these markets. So what we essentially have had was a tight consolidation. We've moved sideways. We've moved into what we call a Bollinger Band squeeze, and as at Wednesday, it appears that we're pushing out and we're breaking above these all-time highs or these multi-year highs. Let me go back and show you the monthly chart which I'm looking at, you can see the breakout here going back to $81.61. 92.81 was another bullish trade trigger. We're going back, and as such, we're hitting highs going back to 96, 97. We're breaking above old resistance levels in 2004, 2005. The US dollar is appreciating in value, and I just want you to at least be cognizant of this and the impact that it should, right, in a perfect world, have on the US market. So pay attention to this picture. Markets are looking top heavy to a degree. We're still bullish. We're still holding these support levels. But as such, a lot of stocks at the moment are looking very, very overextended. They're overbought. And naturally what needs to occur is that we need to, just sit through some form of a correctional period, a slowdown in price until we get the stamina, to continue in the bullish breakout. So that's really, the market update as at Wednesday afternoon. Dow Jones was down 100 points. S&P down about 10, I think. Let me just move this trigger out of the way. There we go, 9.25 points, and the NASDAQ was down 12 points on the daily. You can see a little spinning top here. So my apologies for not including that in the previous video. If you want to learn about BABA, all right, the trade outcome and my own personal experiences on BABA on this one particular trade setup following strict money management rules and capital controls and risk reward ratios, have a look at that previous video. And yeah, look, I'll see you on probably Thursday afternoon, if not Friday, for another market recap. All the best traders and friends right around the world. I'll see you again later in the week for another market recap, and I look forward to presenting you this upcoming week's Pivot Point Pro analysis workshop. All the best. Goodbye.